When people like to say, well, stocks are the same thing as gambling, no difference. Completely different.
That's right.
When you gamble, you put a certain amount of money on that table, you play a card or you spin the dice or you do a roulette wheel, whatever comes up, you either win or you lose. It's a zero-sum game. When you invest in a company, in a stock, it's not a gamble.
Ain't no gamble.
You're buying a piece of that company. It's no different than if you have a pizza shop in your neighborhood and you go to the guy and say, listen, I'm going to buy half your pizza shop. Here's $100,000 from here on in. I'm a co-owner. I get half the profits. And if we sell, then I get half of whatever the sale price is. It's not the same thing as rolling dice on the corner and coming up craps or hitting snake eyes or whatever else. It's completely different. You're buying a piece of the company. So when I buy Amazon, I own a lot of Amazon. Amazon has factories. Amazon has customer bases. They have subscribers to Amazon Prime that bring in billions of dollars a month. It's not going to go to zero. And it is physically impossible for it to go to zero.
And the main reason why that is because of what? Is because of the amount of shares that Amazon has outstanding.
Correct.
And so when your company has 8 billion shares outstanding, you can guarantee, this is what I'm trying to tell you and tell these viewers here, y'all is missing this shit. When you have a corporation worth $3 trillion, that is a guaranteed investment. Why? Because every major pension fund, hedge fund in the world has access to the stock because of what they pay. Everybody got Apple because of what they pay. That you say 1.8% on a $2 trillion portfolio is a lot of money.
Yes.
So people gonna say, if I'm New York City or I'm California pension system, go buy Apple stock and sit for 20 years because our people gonna be sitting here retired for 20 years.
Exactly. You do have situations though. Right. For example, you have public companies like Enron. At one point it was revealed they're cooking their books. That all the money they claimed they had wasn't really money. People were playing around with the numbers to make it look like profits were coming in. And then you find out that it was all, a house of cards. It comes coming down, everything crashes. The stock drops 80, 90%, whatever else. It gets sold off, whatever assets, the company goes out of business, whatever assets they have gets sold off. So you might get something back, but it could be a catastrophe. And listen, Enron was a major company. Major company with pension funds invested in it, billionaires invested in it. It could happen, but you still have something to its name, and it's still going to be worth something because there are assets. There's still revenue. There's they own buildings and so forth.
Something to get out of it.
Look, all I'm saying is real estate is not guaranteed. People like to say, well, they're not making any more land. Take a plane from New York to LA and see how much unused land is in America that nobody wants. Okay? You can buy swampland in Florida without any electricity or whatever. They're not making any more land, and that land is worthless. You can sit on it for 100 years, and it won't be worth nothing. Right. So what I'm saying is there are no guaranteed investments. There are good investments and there are bad investments, and it happens everywhere. Stocks, real estate, crypto, brick and mortar businesses, investing in your friend. It's all an investment, and every investment is unique. And yes, you go into a big company like Apple or Google, which I own as well, or Tesla, they have assets. And yes, it's not going to go down to zero, but it could drop 50% in a year out of nowhere.
Well, we wanted to. So you can go in and buy cheaper.
More if you believe in the company.
Yeah, you want
but,
that.
If you're at the point where, hey, I am taking money out of my 401k and I got to pay that back, and what I take out, I lose 50% on, that's a hard pill to swallow. It's a risk. And all I'm saying is not a guarantee. It's a risk.
It's a strategy.
You take all your money.
Strategy.
If I have $1 million 401k, right, retirement fund, I take $500,000 out and I buy Tesla stock with it, and that year...
Why would you be buying Tesla stock with that, though?
Because you believe in the company. Let's just say...
But that's my point.
But
you shouldn't be buying things because you believe in it. You should be buying things because the data supports the investment. And so that's the point I'm saying. Like,
correct.
If people are buying things because what you think, then that's not an investment. You buy things because the number says...
Correct.
Based on this, like for, if we talking about MFT, Bitcoin is up now. So every company, major company that's a mining company for the next this remainder of this year are going to have blowout revenue. They're going to because Bitcoin is up. There is no ifs, ands, or buts about that. Now, will the stock prices follow? It's different, but these companies are going to have blow revenue because Bitcoin is high.
Correct.
That's a guarantee. So my point is when I say this, the same person that has the $1 million portfolio, if I go in and take the money, I don't go to Tesla. I says right now, the data shows you just reported earnings for the first quarter, you just reported for the second quarter, and y'all got earnings coming for the rest of the year because Bitcoin is high of money that's went in. So I would take it and put it here because the investment is already priced in. Like the guarantee piece, I'm not talking about guarantee like, oh, we just running. I'm talking about it's a guaranteed play on the strategy.
I think what you're saying is you have a margin of safety.
Yes, a huge margin of safety.
A Warren Buffett term. And
yes, a good point, yes.
Yes, and Warren Buffett, this is something that I always think about during my investment time, is the stock market is a popularity game in the short term and a weighing game in the long term. Meaning, you could have a hot stock because the news is reporting that, they have this big AI, breakthrough and they're poised to become this. And the CEO is very outspoken like an Elon Musk and he's saying all this cool stuff and everyone's into him, or the opposite. Elon Musk goes and smokes weed and, buys Twitter and says a bunch of crazy stuff and the stock, the Tesla stock drops. Like that's when I bought my Tesla. When he was doing all his dumb shit.
Yeah, so did I.
And the, Tesla stopped, and I own Tesla. So, I know the company already. I said, okay, it's dropped way lower than I've seen it in a while. I'm going to buy a bunch of Tesla stock because right now it's unpopular.
Right.
But in the long term, any company where every quarter they show more profit, more revenue consistently, it's almost guaranteed, because I don't like to say guaranteed, but it's almost guaranteed.
And you could take that.
You could almost guarantee that over time, that stock price will go up.
You could take that.
It's very hard to find a company that continuously makes higher profit quarter after quarter, year after year, and the stock price stays flat or goes down. No, it doesn't work that way. The company becomes more valuable, and therefore the stock price goes up.
And and to the point you say, people who have a lot of money because they make a lot of money have an easier time with dollar cost averaging. And this is why I tell
That's what I do.
People who say about dollar cost averaging, people who don't have a lot of money can't dollar cost average like that. And so this is what you
They
give
can
them.
now because you can buy partial stocks
True,
and so
but
forth.
here's the thing, a partial stock not gonna do nothing for you. So when you're living in the hood,
it depends on where you are. It depends where you are in life.
But a person with money, and I said this, rich people always say, hey man, this the hot book to read, you rich. It's easy for you to say that when the person who has the partial stock can't sell it to put gas in the car. And this is why I try to tell people, people could say all you want about just get a little bit in, but having stocks is not just some game you play. It is a strategy to building wealth. It is not to go in and I'm just going to get a couple pieces here. No, that's not how you play it.
And a lot of people...
And people play it that way. And that's why they fail all the time. And you be talking about...
You and I are on the same page. It's just there's just certain things that I don't want to put out there because I feel dangerous. Because I don't want someone to say, well, this is guaranteed. Let me go put all my money into it.
No.
And the thing is also, I always tell people this because I've made a few stock videos. People don't seem to understand this concept of, well, if you don't sell, how am I benefiting from this? Because I think most people think, hey, I'm going to invest in this stock and it's going to go up and then I'm going to take the profits and go buy a Porsche. But that's not really how you invest.
No.
The way you invest is you plan on keeping that money there forever. You are building your wealth. You're building your portfolio. You are compound interest. You're taking advantage of compound interest. You're not supposed to take it out. Like with my strategy, the only time I ever sell a stock is if I'm no longer confident that it's a company I want to be invested in.
But you also have spendable income where you can go in and make a play. So if you took the same strategy like you say, with a person that had that was only had $500 and they put it in there, and you got people with $500, $600 buying Apple stocks. I tell people, why should you? That's foolish. Why would you take $500 and buy a stock, $150 and get 3 shares? Let's say the stock jumped $300. You make no money. It doesn't make good sense to purchase securities that don't give your portfolio the best performance, and then you get emotional, because it's all about the emotional aspect of what you do, which means
emotional intelligence is the most important thing.
Most people who buy stocks don't sell a stock.
Right.
To your point, even the little guy, because of the emotions of thinking, it's going to keep going up, which means if you never sell any stocks, not you personally, but a person, you can never build a portfolio, because dollar cost averaging is truly, it's realized gains.
That's not
Watch
true.
this.
That's not true. I bought my Google stock, my initial shares of Google stock, I bought back in 2010.
How many shares you buy?
I don't remember the number of shares.
How
but
much
the
money
shares
you
I
spend?
bought are now up 14 times.
How much money you spend, right? Just roughly round about what?
Let's say 100,000.
You can't find another person average to tell you, I went and took $100,000, went and got Google stock. They ain't gonna do it. You can't find 3 people to tell you 17 months ago they went and got Facebook stock, which, by the way, everybody in the world, Chinese, Africa, everybody knew that Facebook stock, in the S&P 500, one of the largest companies the world's ever seen, stock price was down at the bottom of the can, and people wouldn't take $2 and go buy it. So I say that to say is that you, like me, has the anomaly to understand $100,000 right here is going to be 3 times that. People don't get that. So they go get 2 shares of Google. They get 3. They don't go say, this is this. People don't invest that way. And so I try to tell people that what I was able to do in the pen with finance is guarantee myself a way to make revenue consistently. That's what I did. Now, if that was making revenue every day, every week, whatever, I made returns. Because then I tell people, go find me someone on the internet today to say, the shit the street's saying is lie. He lost my money. He rouge. He ain't never made that. It's all this. All this shit I got out here. I said, if all I say can't be, you find one. I said, I was predicting shit beyond imagination.
Right.
Find me somebody that said it ain't the case.
Right.
So I'm saying to people that you may say this ain't the case, but I have strategies, foolproof strategies that can guarantee.
Not foolproof.
Not foolproof, meaning that no, the markets can't go down.
No one is foolproof.
Not me. So let me reframe.
Warren Buffett has lost money on investments.
So if Warren Buffett loses $25 billion, what have you lost?
He's fine.
You've been invested. So what loss? So when you say lose what? So that's what I'm saying. You keep saying lose. What money you lose? If Google go down right now, you ain't lost no money. It's value. You ain't sold now stock.
Yeah, if I sold. If I sell, then I lose.
So there is no loss here. You know this. And you know that when people sell their stocks for losses, they rotate over gains. So This is a rouge that people in the markets lose money like that. To your point, it ain't no safeguards. You can't predict that you're going to make money. But this is what I tell people.
There isn't. Even Amazon, if it was found out that Amazon was cooking his books,
it could be a
75% loss in one day.
It'd be hell to pay. He'd be held to pay.
Right? Jeff Bezos is gone, and the guy who took over was, and
that's always the risk to the portfolio.
Drug habit, and who the hell knows? It's happened before, it'll happen again. In fact, when you look at like the S&P 500 from like 20 years ago, I think like 90% of the companies are no longer on the S&P 500.
That's true.
Things change.
That's true.